you have Donald Trump that has rattled the world order. But what does this mean? How should one brace this sort of a storm that has come about? We have Anurag Singh, who's the managing partner at AnsidCapital, as well as Seth R. Freeman, who's the managing director as GlassRatner Advisory and Capital Group. Very good morning, gentlemen. Thank you so much for joining us right now on this show. I know it's late in the United States, but yes, it's a big news. And let me come back to you. Let me come to you, actually, Anurag, on this and get your views on this. How do you think this entire move coming in from Donald Trump will sabotage the world order, given the fact that the economic engine, he is trying to actually move it, claiming that it'll supercharge it, but it doesn't look like that's the way how it's going to be. It's not more than a Liberation Day. It seems like a seismic storm or quake that we are all witnessing at this point in time.
Yeah. So, Cheryl, I look at it a little more constructively than, much of the commentators are kind of putting it out to be. Here is my base case. There is time till April 9th. If a country has, for instance, India has 26% average tariffs, India can quickly ask the calculations of how did the Trump administration arrive at 56% of average Indian tariff. And so they can tomorrow decide that, okay, we'll bring that 56% to say 10% or maybe zero. And then this 26% on India also goes back to zero. So that is one scenario. The point is, I don't believe that, one set of people are saying, whoa, this will invite retaliation. Well, what Trump has done is actually retaliation for years of free access to US markets. And now, and I think I like the Australian PM's response that, okay, they are kind of, they can't appreciate this tariff, but they will not retaliate because, by the way, how will they retaliate? Because they already had they initiated this. So that's one instance, Cheryl, that it is now up to, look, US needs global imports and global markets need US market access, correct? It is up to every country to decide and kind of make a trade-off as to what do they need more. They need to, take the margin off or whatever, but they need access to US markets. They got to make some compromise. It's a retaliation by the United States. There is no retaliation on retaliation. That's how I see it, Shirel.
All right, so uncertainty still prevails in the markets. That's the take, but definitely it is now seen that the announcements were more aggressive than what the people were anticipating. But Mr. Freeman, help us with your take on how the markets are supposed to react to this, because it seems like that these announcements have put an abrupt ending to the kind of rally that at least US markets were witnessing. And now what we see is that post these announcements, US futures are down significantly. The Asian markets are reacting too. But on the equity markets, help us understand that how are they expected to react going further?
Well, I'm very anxious to see what happens tomorrow morning here. But I'm not the only American who's now had about probably 3.5 to maybe 4% knocked off of our retirement plans, thanks to today's announcements. The problem here, and I appreciate Anurag's analysis, is that it just creates enormous uncertainty. And we know that growth is slowing down. And this just makes it even harder for businesses to do their planning. And it may be that this is kind of the big shot out there, and countries will very quickly make adjustments to their tariffs and to their non-monetary restrictions on trade. But it takes a while for that to work through, if that is going to happen. So in the meantime, I think we're going to see a lot of turmoil and volatility. And the problem here too is that we have a lot of goods that are imported from China, Vietnam, and so forth, that are pretty much captive manufacturers for companies like Apple, for example, and other kinds of electronics and clothing and so forth. And this is another example is something as basic as toilets. For example, Kohler Company now manufactures about 90% of its toilets in Mexico. There's hardly any toilets actually manufactured in the United States. So it's products like this that will have an immediate impact on consumers.
Right. Anurag, let me come to you and get your views on this one, because almost unnoticed in this entire sweeping new import tariff that was announced by Donald Trump, one of them was the energy commodities have actually been excluded in this one. How do you view this entire thing, given the fact that now US also is a huge producer?
Correct. Correct. Not only energy, there is lumber, there is copper, there is steel, aluminum, there is, auto parts which is subject to, and there is semiconductor, there's pharma even, right? About 150 billion of European imports to US is about pharma. So look, I think Seth makes a very interesting point, which is a valid point. There is no blanket approach to this. I think what upsets markets here is that, despite tariffs, you cannot manufacture everything in US, right? Even if you put a 20% tariff, that's the healthcare premium in US, right? For every employee. So the point is, you got to pick your spots and try and, target only those industries which are capable of being produced or substituted within the United States. There's no way you're going to make furniture or clothing or garments or any such thing in US. So I think that sense, I think this blanket approach seems a bit of a stretch. Having said this, I think it'll be kind of shared between both, some of the costs will be passed to the consumers, but at the same time, I'm sure some of the negotiations will happen between the countries in terms of, eating up the margin losses, from the exporters as well. That said, there is another route. The rest of the world is about 10%. What has been happening till now is, the China goods have been branded via other South Asian countries and they've been coming to US. And I see now that there will be new spots kind of emerging globally, which will have just 10% tariffs and, stuff would be routed from there. So in a globally competitive market, I think you got to pick, because US is not and cannot be the manufacturing base for everything in the world. And in that sense, this seems to be a bit of a opening salvo rather than the final cut. And it's a bit of a volatility. We'll have to take that, right? I think Srishti, can you put out your question again? I think I got sidetracked on this a bit.
Fact that I was just talking about the fact that, it is amazing that he did not put outrightly and sweeping tariff on the energy commodities, and that's exactly what you spoke about, because it's not just the energy commodity, there are other segments also, or other sectors that he's not gone ahead with that sweeping sort of a tariff at this point in time.
So see, the ideal position is that, US doesn't want to put tariff on everyone, right? But you got to give some space. I think as I see it unfolding, I think if the countries can even give half a space that Trump administration is kind of looking at, I think Trump will be more than happy to just unwind all of it. Because understand and I think Seth made this pretty interesting point, people can only take as much damage to the 401ks. And that's a very sensitive issue here, apart from, Medicaid, Medicare, and all of the other stuff. You can't be sinking the economy into recession. That's something which nobody's going to take, all in the name of creating jobs in US. So I think Scott Bessent kind of needs to find the balance here. I think he's a sensible voice. We hope he'll find a quick balance and the end game to this.
Absolutely, Anurag, as well as Seth. And my heart goes out to all of you, because given the fact that, yes, it's US markets that are getting hit, the Asian markets that are getting hit, your 401 plans are also getting hit, all thanks to this sort of uncertainty and the tariff moves coming in. But thank you so much for this joining us this morning. And it's late in the night in the United States, and also helping us decode and try and understand and analyze exactly what should we read in between the lines when you talk about the Trump tariffs at this point in time. Thank you so much for making time for us this morning. But yes,
if you like this video, then like, share and subscribe to ET Now.